can you give us maybe a few examples of how traders or investors use these products?
There is a range of strategies out there. Like, for example, beta replication. If you're looking for cheap, efficient exposure to Japanese equities, using Nikkei futures is one of the most cost-effective way to get it. And also, a popular way to trade futures is for hedging. For instance, asset managers or pension funds use futures to hedge their Japanese equity holdings. And also, like systematic trading or quant funds, they ride on the round-the-clock liquidity and often trade an arbitrage between the different exchanges. And also, you will often see traders do things like Nikkei versus S&P 500, Topix versus Nikkei, depending on their macro view, which is part of like relative value strategies. There is the Quanto Nikkei futures, which are US dollar denominated, but track the yen Nikkei index without FX risk. So super useful for investors who don't want to manage their currency exposure. If you're running a portfolio with Japanese equity exposure, like directly using stock baskets or ETFs, Nikkei futures are an excellent overlay tool. You can adjust your market beta in real time without touching the underlying assets. So for instance, if the market's moving overnight and you're based outside of Japan, for instance here in Singapore, and you can act immediately with the CME Groups like Nikkei 225 futures, you don't have to wait for Tokyo cash markets to open. Also, if you're managing currency risk, especially with the yen being very sensitive to macro themes like BOJ policy or US rates, you can tailor your hedge using the US dollar Nikkei futures or combine them with FX products for more complex strategies.
What kind of investors are most active in this space?
It's a very diverse group. You have got global macro hedge funds using it for directional views and risk management. Also, like you have got asset managers doing tactical allocations. Banks and dealers use Nikkei futures to hedge structured notes. And also they use this for index financing strategies. And increasingly, retail traders use the micro Nikkei contracts. These micro Nikkei contracts have really taken off. CME Group has more than 30 retail platforms globally offering them already. Since the launch of micro Nikkei about half a year ago, we have seen fast adoption across the regions, Asia, Europe, and the United States. Singapore is definitely one of the key hubs. When we look at CME Group's micro Nikkei volume, about 9% of it is coming from Singapore-based traders. What's more interesting is that 65% of total Nikkei futures volume at CME is traded outside of Tokyo cash hours. That tells us investors want to manage risk when events happen. Whether it's Fed or BOJ meeting or geopolitical event or economic data and earnings, it could be corporate earnings outside of the Japan or the US. So we are also seeing increased like intraday trading. Clients are more nimble, using liquidity around the clock, and not just when Japan cash market is open.